Did you realize that Tesla stock owners just received a startling and unexpected warning from Raoul Pal? Investors in Tesla stock are virtually always prepared for a surprise, good or bad, regarding the company. Continue to tune in and observe to see what Raoul Pal has to say. It takes a lot to surprise investors in Tesla stock because there is nearly always news about the company, whether it is good or bad. Nonetheless, professionals like to alert investors so they can be ready and let them base their choice on their assessment and the information provided. You will learn about Raoul Pal's surprising and startling caution for Tesla stock investors today. Raoul Pal claimed in a prior interview that Elon Musk's early success was due to the equity market, which enabled him to raise an infinite sum of money. This clarifies what is going on right now in one way or another. Economist and investment strategist Raoul Pal is also the CEO and co-founder of the financial media company Real Vision. In addition, Pal is the CEO and co-founder of the investment management firm Exponential Age Asset Management and the creator and CEO of the macroeconomic and investment strategy research service Global Macro Investor. His entire experience in the finance industry exceeds 44 years. Raoul Pal has always had a knack for investments, but his ascent to the top began when he was appointed head of European hedge fund sales in the stocks and equity derivatives division of Goldman Sachs. He left the organization after a fruitful and profitable tenure to work as a chief portfolio manager at GLG Partners. In 2005, he founded the Global Macro Investor, a business he founded with the knowledge and earnings from his two jobs. Leading firms in the hedge fund and pension industries used the Global Macro Investor, a service that provided financial data. Through consulting, the business kept growing the range of services it provided. The company expanded gradually and provided attractive returns on strong performance. He was dissatisfied with the way media firms were failing to adapt to the market and created Real Vision in 2013. In order to provide on-demand financing to the general public, he made the decision to start Real Vision alongside Grant Williams. By providing guidance in newsletters and in other media channels, he elevated the conventional media outlet model to a new level. His company stood out because it offered practical guidance to those who were profitable in the industry. He is credited with making finance more accessible to the average person by creating a platform for streaming videos that is accessible from anywhere. Numerous individuals refer to him as the Netflix of digital assets. His expertise in investment precedes the streaming platform, even though it is his most well-known creation. Raoul's aptitude for market analysis has contributed to his success in the finance sector. His extensive legal and economics background from the University of Plymouth in the United Kingdom added to his skill. Pal recently predicted that a number of factors might cause Tesla's stock price to rise sharply. As previously noted, Pal stated in an earlier interview that Elon Musk's initial success was attributed to the equity market, which enabled him to raise an infinite sum of money. This clarifies what is going on right now in one way or another. A lot of individuals are prepared to pay whatever price for Tesla-branded stocks. Having said that, businesses that don't need financing are succeeding, suggesting that Tesla's stock price may rise further. Pal sent the following tweet in March. Want to hear the reasoning for Tesla having a $20 trillion market cap in 2035? This will either make you despise it or find it interesting. It doesn't matter. I have 25 years with Tim. He does not exaggerate. Is it possible for him to be incorrect? Yes, the corporation is. Worth $10 trillion, even if he is half-correct. American businessman and angel investor Seth Goldstein concurs with Pal that Tesla's stock price has skyrocketed and asserts that the company is pricey. In addition, Goldstein stated that he anticipates a long-term rise in Tesla's gross margins as a result of the company's ability to reduce unit production costs and the introduction of its new subscription software. According to Raoul Pal, emerging markets excite him much more than commodities do. He claimed that in today's technologically advanced, aging world, commodity cycles will be less noticeable. Pal's statements are endorsed by several analysts. They think that developing market dominance will define the upcoming 10 years. A market that shares certain traits with an established market but falls short of that market's expectations is, by definition, an emerging market. This covers markets that were or might have been developed markets in the past. What is your prediction for the price of Tesla's shares over the coming months? Post your ideas in the space provided for comments below. For its part, Tesla is growing rapidly, moving beyond the EV industry and into the AI space. The recent opening of Tesla's Gigafactory in Germany is indicative of the company's explosive growth. This is intended to enable the business to produce an additional 500,000 vehicles yearly, signifying a notable rise in output, as well as a reduction in the expenses related to importing automobiles from Tesla's Shanghai factory in China into Europe. Additionally, this means that Tesla will likely sell a lot more cars in Europe to people who may not be as familiar with the brand as Americans, thereby expanding its client base considerably. Along with the Gigafactory in Germany, Tesla has begun exporting cars from its recently inaugurated Gigafactory in Texas. Prior to its inauguration, Tesla's domestically sold vehicles were produced at its Fremont, California factory, which can only produce 500,000 cars annually. Having said that, Tesla will be able to greatly increase its output thanks to the factories in Texas, Germany, and California. In a few years, the corporation hoped to increase its output. Elon Musk, the CEO of Tesla, thinks that the company will begin mass-producing electric cars before the year is out thanks to the Texas Gigafactory. Accordingly, after reading uplifting news about the firm, a growing number of investors become increasingly interested in Tesla and its shares, which enhances the perception of the company. More investors started to show interest in Tesla and its equities after the company's shares rose 8% in March. Pal and Tim Davies, the director of research at the Australian venture capital firm Holland Global Investments, talk about Tesla's past, present, and future, as well as the company's stock price and potential short and long-term outcomes. It should be mentioned that Davies is well known for being a fervent Tesla fan. In addition to Davies, Ryan Brinkman, lead automotive equity research analyst at J.P. Morgan, is a supporter of Tesla, citing the electric vehicle company's attractive array of cutting-edge products and distinctive business strategy as positives. Brinkman added that he thinks driving a Tesla is daring, unique, beautiful, and incredibly thrilling. He added that a functionally sound management team supports the enterprise, which is led by revolutionary leadership. Analyst Joseph Spack of RBC Capital raised his rating for Tesla stock to outperform in June and set a $1,100 price target for the company's shares. According to Spack, Tesla's supply chain and vertical integration provided a competitive edge over its rivals. He stated that the company's early emphasis on vertical integration is probably going to pay off in the investor letter. Additionally, according to Spack, Tesla's car margins may surpass 30% in the second half of the year as the typical. Vehicle output is increased at the company's operations in Texas, Berlin, Shanghai, and other locations, and the selling price of its automobiles rises. As the price of Tesla's shares has soared over the past year due to concerns over supply chain disruptions, rising prices, and the possibility of a U.S. economic recession, it is common knowledge that investors are uneasy. Nevertheless, many investors continue to have a long-term view on the EV maker despite all of the market turmoil. In reality, Tesla's share price has soared by more than 700% in spite of the global pandemic in 2020, surprising investors and devoted followers while confounding many seasoned Wall Street analysts. Despite being from a different planet, the Tesla has the same impact as an iPhone, a complete shift towards minimalism, a car that functions as an app, and one that is incredibly fast at that. The future is here, even though you might not want to leave the past behind. Raoul Pal tweeted in March, "Check out our other videos on our channel for more information about Tesla stocks.